Let's take a look at the technicals on the trade. Joining me now is Jay Woods, Chief Market Strategist at Freedom Capital Markets, CNBC contributor. Buddy from the stock exchange about a decade ago.
Yeah.
What do you say?
Good times. What do I say? Wow. When looking at silver, I mean, this move is parabolic. It broke out of a 15-year base, and as a technician, this is exactly what you want to see. It's following in the footsteps of gold. But what we've had over the last 2 weeks, this run-up, excessive would be an understatement. When you look at it from a technical perspective, the RSI hitting 90. The amount, percentage-wise, it was above the 50-day moving average, over 45%, 95% above the 200-day. A bit extreme. And then when we saw the CME put those margin requirements in, that kind of got rid of some of the riffraff, and it's pulling back. I don't think the pullback is over. I do like it on a long-term basis. Great breakout, but I would wait to the mid-60s to get back into it. And then there are other concerns. When silver's breaking out, Elon Musk tweeted this weekend that, you know, this is going to have ramifications on a lot of these technology sectors stocks. Copper breaking out, nickel breaking out, platinum, palladium, we don't talk about those. Also euphoric, coming back in. I think the trade for now is over. Let's see if the pullback is viable.
Jay, there's so much risk in this market. I mean, the VIX is down, what, around 15?
Yeah.
But there's so much risk, and we were just talking about how Caterpillar had this great year because it's part of the data center story now, and there's nothing that's exempt from this story. How does that set us up for 2026? How cautious are you, or how bullish do you continue to be?
Well, I'm cautiously bullish, if that's a term. I'm looking for about 3 to 5%, you know, below average year of returns. But what you're going to see, we're going to have these pockets of euphoria. We saw it with nuclear trades. We see it with the AI build-out. We just seen it with some of these commodities spiking. But now we need to look at the bottom line and find some stocks that have done okay, but still have room to run. And so when I look under the hood, today, no one's talking about this. ExxonMobil hit a 52-week high, broke 120. All right, this stock has knocked on that ceiling. Technical resistance level just broke out with crude under $58 a barrel. It's telling me something, that this stock has room to run. And then if you're looking for something from a risk-reward point of view, this is a good name to be in, because my downside risk, if it breaks 120, 117, I'll get out. The trade didn't have legs. But when you look at pockets of momentum, we saw it with commodities. It could be energy next. So watch that one.
Transports?
Transports, love the transports, broke out long term. Tesla and FedEx. You know, Tesla, not a transport, consumer discretionary.
Right.
Yes, they build cars, but it's not a car story. I think that is a stock technically that's poised to make a nice run into 2026, breaking out on a 1 year and a 5 year term basis. And then FedEx, watch FedEx. 300. It's knocked on that door several times. We're in the 285, 290 range right now. If it breaks out, it's only up 7% year to date, made a hell of a run. That's the next one to move. And then watch the coattails. UPS starting to turn as well. So I like the transports, especially FedEx, UPS, and some of the shippers.
What stock or commodity, whatever it is the canary in the coal mine for this market? Is it Bitcoin?
No, I still think Oracle has to prove us. You know, that debt issuance issue is a red flag. And technically, it's broken down. It's made it back, but that's more of a relief rally. I'd like to see Oracle another solid quarter. It's got new leadership there and debt problems. These are things that I don't like when picking stocks, and it's in a downtrend. So Oracle's the one I'm watching. Meta, let's see if that can come back. That's another one that's broken down. We don't talk too much about how that reacted after last earnings. The earnings were solid, but that AI spend is being, you know, punished, not rewarded now. So those are the two that could be the canary in the coal mine to take us a little lower and drive technology lower, which would, you know, be a stumble for the market overall. But I still think the broadening is the story, and we're going to see it in some of those names like the transports, like energy.
All right.